What's up everyone, welcome back to a new video on the Alien Algo channel. Today we will be going over the markets. I already recorded this video, so this will be a re-upload, but I had to record it again because my microphone did not record. It was turned on properly, but it just did not record the sound. So with that having said, my excuse, and let's get straight into it. So I already analyzed it earlier today, so it will be a quite quick video. Normally I open the charts and I analyze it just like you would. So it's not me preparing the charts or anything. No, I like to just start the video and I look at the charts just like you would. So no hindsight, no preparing. That's not the way I like to do it. I like to do it as a daily market outlook, so you guys know what am I looking at, what points do I find crucial, and such things. So with that having stated, let's get into it. We will first start with the daily chart like usual. So when we are analyzing this daily chart, we pretty much see, I did not expect this to really happen, to be frankly honest, but what I did expect, like this, I stated, I was shorting this move, but I closed my position right here, because I expected the range lows to hold, meaning this crucial support area. So it did not, so I closed my short a tiny bit too early, and it just could have been an even better trade where it swept this liquidity right here from this previous wick. And if we look at this on a daily basis, this is that crucial support area to hold where we would like to see price being pushed back above to remain bullish on those daily time frames. So what do we see? We see we previously closed right here below the level. This for me is not that much of concern because I am a big believer in liquidity grabs and deviations where you close one candle below it and then the next candle could fully engulf that move. What do I mean with engulf in this reason? In this case, most people see it as, let me find a quick engulfing candle. Because I'm not talking about the engulfing candle basis, I'm talking about engulfing that previous move, meaning we fully retrace a move. So let's state this as your move towards the downside. Here we fully engulfed that previous move. And of course, a engulfing candle would really have to close above this part, where the body is higher than that previous candle. That's technically an engulfing candle. So with engulfing the candle, I mean where we just retrace this back towards the upside. So here we see this was your current move towards the downside. So I want to see it break above this or even just fully retrace this. So closing one day below it really does not matter for me, at least one candle. So let's get into the 4 hour. I've already drawn this because I recorded this previously. I am looking at this as your crucial resistance for the 30 minutes, which we would like to flip. And if we don't flip it and instead we start to see something like this where we form some bit of weakness, I would rather short it back down. So with that having stated, this will be that crucial area to flip to the upside. This will be my crucial area to hold on a lower time frame. If we don't hold this on a lower time frame, I would be looking to take out this wick, where I hope you guys know this concept by now. When we usually create a liquidity grab or a deviation from a wick, you usually trade into a next area. So when we look at this on a 4 hour, you see right here, this was your wick. So when we expect a sweep of this wick, we usually expect it to come back into this candle, meaning the lowest candle below that wick. So right here, when we look at this on a daily perspective, you see how this is happening multiple times, where you get a sweep where it gets into some previous levels. Like right here, we swept previous level, which I know on a 4 hour was around here, and we traded back into this area right there. So this can also happen on other sides of the market, of course. So what am I looking at? We want to see it break above this level, and until that happens, I am leaning more towards the bearish side, where we should probably take out this wick, or we need to hold this area and form some sort of compression over the weekend to see some possible upside again. Until that happens, I'm simply leaning more towards we take out this wick, we trade back into this zone, and here we will see if we will survive or fully die. And what do I mean with fully die? I don't think we will. I think we will see a final leg before we get into that choppy summer price action. So look at this again. Look at this right there. 1 and 2 and 3. So it's a little bit wider, and I meant last time I want to see this general pattern. So this, I do think we should see one more leg up where we probably trade into 130k, somewhere around that area, 130, 150k. So right around here, when we want to draw it, to visualize it. This is also why I've drawn this right here till that level. So for us to get into those levels, what do we need to clear? Quite simply, this resistance and this resistance, where this was your previous low and your previous high multiple times. Here the same happened, where this first was your support. When it got flipped to the downside, we saw a big flood. Here this same exact thing happened, where we retested those previous lows and you dropped down again. So these will be those levels to flip towards the upside for me to be more on the bullish side. Well, I simply expect one more leg up before we get some bigger correction and we just start to chop for a couple months, maybe 1 or 2 months, and then we make a final leg and the whole game is done again for a year or 2. So with that, we simply will be looking at these levels and this level for the lower time frame triggers to confirm that bias. Either we trade first into the downside, or we flip these levels to create some more upside. What are we perfectly looking at? This and this, right? So this is that crucial area that we want to see hold. If it finds some acceptance below this, just expect it to go back lower. So that will be it for BTC. Now let's go over to ETH. It's kind of annoying that I had recorded this episode already, so I am not able to analyze it with you guys, but I will simply explain again how I find this mid-range. I found this range high where we pretty much traded 1, 2, 3 times, and later we flipped it and got support from it multiple times, finding acceptance back below it. When we retested those prior range highs, we went straight towards that 0.5 level again, which for me confirms this to be a lower time frame range. For the downside, it's less clear, but we do have 1, 2, 3 points where it has been respected, with also a deviation, just like explained, where we have one move and the next candle reclaims it already, confirming that to be a deviation, where we later retrace into it and get a retest of those range lows, and we get straight back up to the highs. We also see this little compression right here, so this part of price action will be quite crucial in my opinion, where we either need to flip this range highs to confirm more bullish price action, or we will find acceptance below that 0.5 level where we instantly trade back into those range lows. So with those lower time frames, let's get into those higher time frame again for ETH. Let's remove this, not relevant anymore. We obviously had on a 4 hour this micro range where we started to chop again, and we later broke below it quite aggressively, but we are still holding that major range low on a daily time frame. So this for me is a quite bullish, where we of course like to buy range lows and like to sell the range highs. So what do we want to see? We want to see this daily, just like I explained on Bitcoin, where we saw this engulf. We want it to engulf this, and the critical level to reclaim is this, your prior range lows, where this would be the best case scenario. In my opinion, maybe we first chop a bit before we break out, but I want to see this getting reclaimed for me to be bullish on a higher time frame, where I would state again, it's time for some more risk, but currently we are playing more on the defensive side. So with that having said, let's go over the last time frames. I will fully remove the drawings for this 1 little second. My excuse, quite back. He had to answer a question. So when we look at this, of course, this weekly looks quite bad. But what do we know from that prior video that I explained in terms of how we analyze candles? It's quite logical when you dumb it down. Yeah, I'll actually use this chart, just fully remove this, we don't care. So, how do we analyze those weekly candles? We find that previous level right here, right there, this point, and this point. And then we see this candle has started on the 16th. So what do? We go onto the 1 day, we go onto the 16th, we put a vertical line because we know now these levels are really crucial. So let's analyze what really happened around here. You see it first getting chopped around, and we see that major rejection right here, where we currently are retesting this. So this will be my crucial level to reclaim. And this looks quite funny, because now when you think about it, what is around that level? Yes, your prior range lows. So that was the wrong chart. This one, right here. It's right around your prior range lows. So this will be that crucial level to reclaim, which we currently don't seem to be doing because we have been retesting it. So we want to see the reclaim of this to get a bullish candle on that weekly, where we of course want to see those levels hold. And when we of course analyze this on a more compression based logic, we see this little trend line right here. When I should do this on a daily, actually, I know, because on the daily it's way cleaner. Right here you have that compression of 1 touch point, 2 touch point, and 3. So this is that level to reclaim when you look at it on a trend line perspective. And of course, I did not state this in previous videos. In terms of compression, we have 2 types of compression, where we just really form like a more logical range with like 1 deviation above or below, but we just range and we create a clear compression. There is a second type of compression, where we start more explosive and we slowly start getting smaller moves, while this just forms a sort of triangle pattern. And this is the second type of compression, where it can either compress completely horizontally, or it compresses like a bit of a triangle, where the moves just slowly get smaller. So this we do want to see a close above this, because otherwise we will most likely take out these lows, which wouldn't really be that surprising, to be honest, looking at it from here. So let's get back into the previous chart and quickly sum it up. I'll do this on the 30-minute because this is my favorite time frame. So we see this is that level to hold on a lower time frame, otherwise we will most likely trade back into one of these lows, or we need to flip this crucial area for me to look at prior lows again, which for me would be right around here. So if we break out from this, I will most likely look at this area to find some sort of resistance, where I would like to take some profits or even flip the position to a long if we break out, of course. Otherwise, I will just be shorting this move. So for ETH, we need to find acceptance back above this range for me to be bullish on a lower time frame. So something like this. Well, annoying little magnet. So something like this where we just chop around a bit and we clear those highs and we just slowly start moving up again. If we find acceptance below this, I will most likely be shorting it back to range lows, where then I will be interested to buy again. So one more thing I would like to show you guys, because this is one of the things I called previously, that Hyperliquid was one of those stronger projects. And it still is, in my opinion, when you compare it to others that just completely have been slaughtered on this move. And why is this happening? Because that BTCD is still rising massively. And I already drew this on that previous video I recorded, where this is your crucial level. That if you break up from this, there really is a lot of room to continue from here. And this really would not be bullish for the majority of alts. So we want to be looking at this level right here to catch either that was not the thing I was supposed to draw, or we'll either start to reject from this level again, where we get some sort of time for alts, and even if later it continues inside an uptrend, meaning we, for example, would reject here, and we go back into here perhaps, and later we just continue back up, here you would have a short time period where alts will most likely do better. But if we break up from this, alts will just get completely screwed, in my opinion. So what can also happen, that we just start to create a market structure shift right around here, where we just trade into a possible alt season, which I don't think is quite likely at this moment. So let's get back into hype, because the thing I wanted to explain, which now has shown a perfect example what I mean with finding acceptance back within the range. So we identified this to be that major range, where we later got a little break and retest. Later we found acceptance back below that previous high, and that crucial point for me was to hold this area. Because like I stated in that video where I showed this setup when price was right around here, I shared this move on the way up, and I said if we come back down, we could perhaps be a buyer again. What do we not want to see is this getting rounded, like right here it happened. And what did this really mean? Because I stated acceptance back below inside the range. So what does this show? We break back into that range. And you see here, it looked, this exact part, it looked to be holding. But what did we get later? A break below, a retest back inside those range highs, and then it started to flood down. So what level will you usually be looking at when you are trading such a deviation? When you trade a deviation from a range high, or of course from a range low, let's say the deviation happened here, your first target is that 0.5 level, which is this blue line. So you clearly see it did not hold support on that 0.5 level. When it does not, it means it will most likely trade back into range lows. So for now, I do think this looks a little bit too good to be true. It could of course trade into it, but I don't think it will. I do think we should take out one of these wicks right here. But I don't think we will take out this last wick, because that would just be way too clean to trade, and market does not like to make it quite easy for us. So a setup like this I will be kind of ruling out. If it gives, of course it gives, and we want to see that reclaim to be quick, but I am more expecting it to be right around here, where we just barely front run this wick while we take out these major wicks that started this move up. So this will, I wanted to show like the acceptance back within a range. I find this concept very important, which when you look at Bitcoin, this is the wrong chart. This is also how our previous top has been formed. because I stated this back then to be some sort of range. And look what happened. You get above that range, you find acceptance back below. I want to show this on a daily because it's a little bit cleaner. Where we stated these to be our prior highs, right? This was your range high. You deviate above it, and you later get back inside of it. You see where you break down, you retest it, and this is where you move right away towards that 0.5 level. First, you catch a bit of support, start to chop, later you lose that 0.5 level, and you retest your 0.5 level, giving some more downside. We chop again, and we get back into that 0.5 level, and this is where that bear market started, and I opened my major short. So this I wanted to show. Hype is just giving a perfect example, so I decided to drop this in the video so you guys learn something besides what is the market currently doing. So with all that having said, my excuse for the last video, it apparently did not have sounds, so shout out to the guy that made me aware of this. And with all that having said, guys, keep trading and have a nice day. Bye.